How are you doing, green industry business leaders? This is episode number 9 of the Green Industry Profits Podcast, where we talk about how green industry companies can grow in a profitable way. In today's episode, we had a conversation with Lucas Durham of Durham Landscaping. We dive into the niche he focuses on, subscription pricing, job costing, selling his company, route density considerations, and much more. And before we dive into this episode, just a quick note that this podcast is brought to you by Cycle CPA, a remote accounting firm that works specifically with green industry businesses. For more information, go to cyclecpa.com. And without further ado, let's get into today's episode. All right, so excited for today's episode here with Lucas Durham with Durham Landscaping, and he's had quite the journey, and even more recently sold his company. So we're gonna get a view of, you know, really how it was running the company, selling the company, and everything in between. So thanks for joining us, Lucas.
Yeah, absolutely, Joe. Thanks for having me.
Awesome. And so please, how did you get started in the green industry?
Yeah, absolutely. So, as a kid, the only sort of green industry experience I had was trimming hedges with my dad, various, little things around the yard, like a lot of people do. Ironically, I did not even mow our grass. So the first time I ever pulled the string on a push mower was in my friend's backyard a month before we were trying to start our own business. So using my own machine was kind of the first way. I didn't have, family equipment that I could get started with. So I really did start in the business, and begged my mom to let me borrow her car and go buy a push mower off Craigslist that I had found, and went over there with $100. I think I had 130 to my name at the time. I was probably 17, and he had like three sitting out in the grass, and I picked the cleanest looking one, and that was kind of my start. And then I begged for an Echo 225 string trimmer for my 17th birthday. I was able to get that, and that was the setup at the beginning there.
Wow, awesome stuff. And as you've grown the company, what service lines do you focus on?
So our primary focus has definitely been monthly landscape maintenance, lawn maintenance. We used to do a good amount of full service work. We kind of gotten away from that because we found mow, blow, and go has just been simpler and a lot less things that can go wrong, providing the simple service. If clients request more, we obviously will take care of that for them as well. And then kind of one-off tree work as well has been highly profitable for us. And that's been our kind of our main focus. I found that landscaping jobs as a whole, there's a lot more that can go wrong. And when you're doing one-off jobs, you have to always be feeding that next job to have work. That's why I really prefer the simple recurring maintenance model. And that has always been our core, 80 to 90% of our business.
Very nice. Yeah, and then is it mostly residential?
Yeah, almost all residential. We've done a couple different commercial properties. We only do one currently, which is not, very insignificant amount of our revenue. I've quoted multiple and looked at multiple, which we'll get into a little bit later, but based on our pricing platform and how we look to make higher margins than everyone else, commercial work does not really fit that business model.
Absolutely, yeah. We could definitely get into that further. But as for when you started the company, how did you
Yeah.
market for clients?
Yeah, so our first marketing, we had some business cards. We knocked door to door, as I feel like a lot of people start that way. You get a $10 500 pack off Vistaprint, and you kind of go from there. We use the Nextdoor app, which I would honestly only really recommend for starting out. It's going to get people in your area. So we were obviously limited. We didn't have a truck or anything, so we had to ride. We had a riding tractor that my friend's neighbor just left behind when they moved, and we kind of used that to tow it. We had a little trailer, and I used it behind a bike that I got at a pawn shop. So we were very logistically limited at first, without a vehicle of where we could service. So we had to focus on our neighborhood. So Nextdoor worked all right for that. Getting your first 5, 10 clients. That's what door knocking, family, friends, and Nextdoor are good for. And then from there, you can kind of quickly grow from there. Since that point, Google My Business has been 99% of it. Um, that's kind of a game changer, so to speak, for sure. And a lot of CRMs have links where you can collect reviews on your Google My Business directly from invoicing, and it will automatically prompt your client to leave a review after their first service. That did not really exist back in 2019 when I was starting out. You had to kind of just request them or try to send a link, but that platform was very clunky. Back then, it was difficult to do that. Now it's very easy. That is the number one way that you are going to transform your business and your life is getting reviews on Google My Business, keeping updated on that. That is, I would not have any of the business that we have done the past 5 years without Google My Business.
Wow, very nice. And for for other technology and software used in the company, uh, I guess you mind elaborating on some of that?
Yeah, absolutely. So at the very beginning, we had a business email and Yardbook, and I quickly got out of Yardbook because it was just very clunky to use, and I was using the free version. I will add that in, but I needed something for free to just send an invoice so that then we could collect a check and record a payment. That was about it. Then I got a QuickBooks account very quickly after that because I knew for tax purposes, I needed to have books, I needed to have records, and Yardbook. Now, part of that was user error, me not being quite with it to update that and keep it accurate. We use QuickBooks and the recurring invoice feature because in the Florida market, you mow year round. And so we charge sort of a subscription price that people pay 12 months out of the year, even though we're servicing the properties weekly, middle of April to middle of October, and then bi-weekly or once a month the other half of the year, they pay the same price year round. And recently, as we were looking to transition the business into Ethan, who is my foreman, his ownership, he's the one who took over July 1st. We're recording this on July 12th. We got Jobber. Jobber allows us to keep cards and payment methods on file and have those recurring jobs charged automatically on the first of the month. That is another, just like Google My Business, game changer. One of the number one issues that most businesses have is cash flow. Now, we didn't have it from a perspective of we needed more cash in the door to pay our liabilities, but simply from a perspective of I always have accounts receivable, invoices that we need to collect on floating out there. And having all your income automatically collected at the beginning of the month is the best way to run your business. That's not really my opinion. It's kind of just how it is. Some people will tell you people won't sign up for that, or you'll have issues, or you need cash or checks or fees. The time that it saves you to automatically collect payments on the first of the month negates all of that because if you're doing 100,000 in revenue, and you pay a 2% average fee, 1% for ACH, 3% for credit cards, let's say it averages $2,000 in that year, you can do $2,000 more work easily in the time that saves you, not having to collect payments and chase payments. So that is the best model. If you're having cash flow issues, convert over to that as soon as possible. If you're billing per the week in the growing season, you can have those. I know Brian's Law Maintenance has all of his charge at the end of the month for all those previous cuts, or upfront or weekly, whatever kind of makes sense for your situation. But having a payment method on file for all your clients is a game changer and is how you're going to get to the next level and really keep all your income as well.
Absolutely. No, no, I totally agree. And you had mentioned subscription pricing.
Yes.
Do you mind giving some advice for those that are looking to maybe implement a similar model?
Right. So it's all going to depend on your growing season and your geographic region, obviously. Now, so here in Florida, I'll use our example, and then I'll give you kind of a alternative if you're someone more up north or just even further north in the southeast region. Grass is dormant starting in November, December. So for us, if you have an irrigated St. Augustine yard that's fertilized and you have a standard growing season, meaning we don't have any crazy dry spells, you're going to mow it weekly, beginning of April to end of October. Then you're going to mow every 2 weeks the other half of the year. It comes out to roughly 42 services in a year, but we'll use 40 for this example. So let's say it was a small yard and you charge $100 per month to maintain that property, and you mowed it 40 services in a year. You are earning $30 per service. Now, if you end up only coming 38 services a year, you're going to end up making, what is that, 31.50, $32 a service. So you're making a little bit more. But the beauty of subscription pricing is that your cash flow is the same year round. And that forces you to, if you can run on a healthy margin in June, July, August, where your fuel prices and your labor costs more importantly are higher than in the winter. If you can make profit during those months in the year, then in the winter you'll make double or triple that. And so you can really cash out in the winter and also still be profitable during the busy season. Now, a lot of you might be thinking, okay, well, what if people hire you in April and then fire you in October? The amount of times that that's happened, say, is probably 10 to 20 times over the past 5 years. So it's just a negligible amount. Theoretically, someone could do that and their cost per service that they paid you for is going to be a lot less. It has not been an issue for us. It just hasn't been. So the subscription model has done great for us. And there are couple of caveats that I can add to that. And sort of things that we figured out to grow our bottom line. Now, if you were in, let's say, Georgia, Tennessee, South Carolina, North Carolina, and the grass grows, maybe you have a lot of those people, they'll start mowing, March, and they'll stop mowing, October, November, and they'll have cleanups, scalping, all of that. What you could essentially do is lay out pricing for all of those services throughout the year, divide by 12, get that into a subscription price, show that to the client, and have maybe a 1-year agreement, something like that, so it's understood. And then you could have them pay like that. And again, you're making a little bit less in the summer, but you're stretching that revenue out and therefore that cash flow year round. Another way to do that is with commercial work, because a lot of commercial work is done on what I just described in an annual agreement. Jonathan with Florida Turf Pros has a lot of videos on how to implement that. I'd highly recommend checking out his content if you're looking for more specifics on that. And doing that model, if you can survive and pay your guys and pay for your equipment and pay your fuel during the summer and still make profit, then in the winter, you will have a lot of profit left over. And you really need to be looking at your financial picture on an annual basis, not on a month-to-month basis, if you're really looking to grow your firm and grow your bottom line specifically.
Yeah, no, that's a great point, Lucas, and I've taken notes here as well. I think when it comes to simplicity, sometimes it's worth if like you said, if only 10 to 20 kind of canceled in the 5-year period, didn't really matter, right? So
Right.
that's a great point. And then so when it comes to running a profitable company, whether it's favorite metrics that you track or just ways that you approach just the operations, you mind sharing some advice for those out there?
Yeah, absolutely. So for Ethan, I've been sort of discovering all of this, figuring it all out for myself over the past 5 years. And now he is sort of getting to start already running on the ground with all of what I figured out. So I told him, I was like, you are getting a business that I wish I had created for myself. And so here's the simple sort of strategy that he has. So he's working solo, planning for the first year, and then he might grow from there, but planning solo for the first year. So our route is fairly dense, not as dense as I'd like it to be, and no one's ever is. So let's say over a 10 square mile radius in our area. In that, you have subdivision properties, and then you have sort of independent neighborhood properties. What we have found is if you take dollars of monthly revenue per minute worked, that is the most important metric you can track. And I'll give an example. We have a property that we charge $140 a month for, and it takes Ethan 45 minutes to do. Okay, so we also have a lot of subdivision properties with no gate that take Ethan about 20 minutes to do. We charge $100 a month for those. So if we were to charge the same dollars in monthly revenue per minute worked for that $140 a month property, we would need to increase its price to $250 a month, and the market won't bear that. So therefore, we have a competitive and a comparative advantage operating on that smaller subdivision yard with no gate than we do in a standard neighborhood yard. That doesn't mean the grass isn't nice. That doesn't mean it doesn't make your company look good to be servicing nice properties. but what matters is the bottom line. So if we can do in an hour worked, I mean, not even factoring in drive time, if you have 3 subdivision properties in a row, Ethan could probably knock those out, let's say, in an hour total, dropping the gate to putting up the gate and driving away. That's $300 in monthly revenue per hour worked. I'll just do quick math again, times, let's say he does that 8 hours in a day. That's $2,400 in monthly revenue for Monday, for example. So that's going to stretch to what, $12,200 in monthly revenue if he just does that 5 days a week. Yeah, there's going to be drive time, there's going to be equipment breakdown, but for easy math, that's $144,000 a year gross, every other week off in the winter. That is not a bad business model there. Now, that is a little bit of an optimized setup, but we are already close to that with what I'm obviously going to be the harshest critic of my own business, not even close to that in profitability yet, even though we are still doing fantastic, running about a 75% gross margin. But optimizing for that, you always have to have that target that you're shooting for, and always every day be getting 1% closer and closer and closer to that point. So getting a new customer that's a neighbor, getting a customer that has a card on file versus mails you a check, getting a customer who is going to hire you for landscaping jobs in the winter, all of those you're getting just better a little bit, 1% every month, every day, you're getting closer to that. And then when you get a call for a property that's outside your service area, or you can't quite charge what you want to make for it, don't take it. Send it to one of your buddies, send it to somebody who's starting out in the business. You're going to help them out. The client is still going to get someone that can take care of their property, who's hopefully operates with integrity and quality, like you would hope for someone that you're referring. And you are still on your mission of becoming as profitable as possible, which when you're a solo person, like Ethan's going to be for his first year, if he's not working, no revenue is being generated. So at that business size, it is a little different if you have a 5 crew business where you have different service areas, but you can still implement the same strategy just for all those different service areas and for each of your crews. So it does still apply, but knowing, hey, in this hour long, because your service schedule is broken up, Mondays at 8 a.m., you're always mowing the same property. And so what I found was when me and Ethan were still working every day together, is from 8 a.m. to 9 a.m., we'd kill it. We had 3 properties that were all close together. None of them had gates, so it cut down on the trimming time. And we could just fly through those properties, right? And so I would do the quick math and be like, hey, we just did $330 in monthly revenue in an hour, so to speak, which now I don't even consider that good, but at that time it was. And then the next hour, we'd have a larger property that we only charged, $140 a month for, but it'd take us 35 minutes to do. And then we might have another one. So I'm like, man, we only made maybe $200 in monthly revenue for that last from 9 to 10 a.m.
Sure.
I'm like, if our 8 a.m. to 9 a.m. was our whole day, look at what we'd be making. And that was sort of like how I sort of discovered this. And this kind of all comes back to a trend of knowing your numbers that a lot more people have been talking about the last couple of years. As social media in the green industry and as awareness about how to run a business has really gone out there, the people who are adopting it are crushing it because they are capturing what the market is giving them, right? And so identifying those pain points and then identifying a solution and then working towards that 1% every day, that's how you get it. And every additional, and it's exponential. So if you go for, so I'll use our business right now versus what Ethan's kind of targeting to get to. So right now we're doing $9,000 to $10,000 a month in just recurring maintenance work and profiting about a 75% margin on that, before tax. And we have no debt, so no interest expense or anything like that. So you multiply, $7,500 out of the year, it's 80 to 90 grand, let's say net. That's fantastic. For just a solo person working, like that's great income. I don't want to downplay that. Now, if you're trying to get that up to 120,000 a year, let's say, which is kind of our first target for Ethan.
Sure.
You don't get more hours in the week. So you need to optimize the hours that you do have, especially if you are a solo guy or you have a helper or 2. So Ethan optimizing towards that point, if he can get a neighbor and then drop off our least efficient client, how you do that is you lay out in an Excel sheet your entire client list, their billing amount, and then their average service time per month. And then you can conditionally format that entire thing. And all those clients that are now in dark red, the least efficient clients, as you get new calls and new clients coming in, you just either raise the price of those red clients or drop them or refer them to someone else. You get rid of them. And therefore, you are just cycling your portfolio of clients to always be better. And that's how you get 1% better every day. Now you factor in, you're collecting your cash flow, you're collecting your invoices ahead of time, first of the month for the service of that month. So you're not getting stiffed out of, someone cancels towards the end of the month, you mowed it 3 or 4 times and they just don't pay you. That happens all the time. And to go to small claims court for that, it's not worth it. You'll lose money. So you're limiting that. And the route density portion of keeping those properties close together cuts your gas expense, the wear and tear on your vehicle, the tires. And so exponential profitability starts happening. And that's how you are able to stretch that $7,500 a month in net income to that 12,000 and beyond mark.
Yeah.
If you have a helper, it's even more important because you're paying someone on the clock. So if you're wasting time driving, it's exponentially unprofitable, working against you. And so shifting that into your favor is the best way to grow your bottom line, which a lot of guys tend to lose sight of the fact that that's why you started a business in the first place, is because you wanted to set your own schedule. You wanted to make as much money as you wanted to make. And then they get into it. And then now the goal becomes having the nicest setup, having the most followers on Instagram, having the cleanest machines, having the most mowers, whatever it ends up being, having the highest number of clients, when you've lost sight of the bottom line and what you're taking home is all that matters. All that other stuff is great. I love it as much as anyone else, but it's really ultimately a distraction. And that's where the term law influencer kind of came out of, where your focus is no longer growing your business and keeping your business as profitable as possible, but now it's just growing your following. And there's nothing wrong with that. There's nothing wrong with mowing tall grass or, satisfying sidewalk edge or whatever. But if you are in the business to make a profit, that's what you need to focus on. And that's what I think a lot of people lose sight on. And that needs to be your North Star guiding your decision-making process.
Absolutely. Yeah, no, I think it's easy to get distracted sometimes, right? And um yeah, no, those are great points. Now, when it comes to some of that data, like the time at each property or some of that other information, how are you getting that?
Right. So, I mean, it can be as simple as pulling out your phone before the property, timing yourself, input it in a Google sheet straight from your phone, go on to the next one. It's going to add a little bit of time on that week that you collect it, obviously. But you do it once. I mean, and that move could probably move your bottom line $500,000 a month within 12 months. So I would say it's highly worth it if it takes you an extra hour or two, and you can make an extra $6,000 to $12,000 that year. That's pretty profitable hour that you spend collecting that data. Now through Jobber with the route tracking feature, you can do it as well. That's something that we're kind of still getting set up. It is our busy season right now, so we don't have a ton of extra time to do all this, but we are still working through that. And I believe, don't quote me, but I believe there is capability to track that through Jobber. And that feature is really nice. It will optimize your route, so the most efficient way to drive to each property, and you can kind of grow off that as you lose and add properties. And that data is really valuable. Also, if you have clients that are out of state, which here in Florida, we have a lot of snowbirds that own properties but are up in New York. Well, they'll look at their ring camera and it didn't collect footage while you were there, and they'll say, hey, you haven't been out for 8 weeks. You can send them the Jobber pings of how long you were there and where you were at those points, and it kind of just cuts that conversation. So it's another useful tool as well.
That's awesome. No, that's great. And now, throughout the time frame of running the company, because I do want to get to that point of kind of how you came to sell the company. What were some other challenges that you faced with the company?
Oh man, infinite challenges. So early on, before I was 18, my parents didn't want me to have a vehicle. So, me or none of my siblings. So that was a big pain point. And then Ethan, his parents let him, so he got a Oldsmobile 98. Not exactly the most flashy car for $750 off Facebook Marketplace. We used that with a 5x8 Tractor Supply mesh trailer for a long time. And then I got some equipment defender racks. I don't even remember how I was able to afford that, but I go back and look. I didn't have a business checking account till I legally formed the business. That was another big pain point early on. So getting your EIN, filing an LLC or a C corp with an S corp election is really important. Obviously, this is not legal advice or tax advice, but that's something you should definitely look into and seek professional help on when you are forming a business. So I ran out of my personal savings account because I didn't have a checking account even. So I'd have checks made out to my personal name, and I would go to the bank and put in a withdrawal cash to use for all expenses. We didn't even have a debit card. So getting that sorted was fantastic early on. A lot of you probably won't have that issue. Going from there, I'd say it was really just the business's strategy. That was like really wrapping your mind about what are you working towards and like how are you going to make that happen. So there's an area north of Palm Bay here in Central Florida called Vieira. It's about 25 minutes north, and it's a wealthy sort of master plan community. And we always view that as the money maker. Like that's the place we got to get into. That's where we need to have properties. That's where we can charge the most and make the most money. So I bought a route from an irrigation company who was getting out of the maintenance side of the business for 2 months revenue. I believe it was $3,300 a month in revenue, about 24 properties. And I put, $3,300 down, and I was going to pay the rest at the end of the next month after we had kind of collected it. That ended up being a disaster. And this is right when I was graduating high school and I decided to run the business full time for a year. So it was a bad time to have a disaster happen as well, because outside of that, we were only doing $2,000 a month in revenue, let's say. So that was going to kind of take us to that next level where we actually had the income to expand and do the things that we wanted to do. And the full service aspect of those clients was not something that we had fully calculated and fully taken into account. And it ended up just being a disaster. The clients expected the world. We couldn't really provide it. And we were still a little too new to really, have the context to realize that this wasn't that big of a deal and we just shouldn't have done the deal. So I ended up being forced to walk away from it. But that was a really valuable lesson. Taught me that buying clients is not the way to gain clients. And that you don't have to be in a rich neighborhood to make good money, because charging for a regular lawn in Palm Bay, $120 a month, was easier, lower stress, closer, and about the same margin as mowing fancy houses up in Vieira, with none of the headache. So that ended up being a lot better deal. So that allowed us to kind of condense our route back down and focus on our local service area and stop using the excuse of, oh, my market, you can't make that where I live. You can't, you can't charge that. You can. That's just excuses. Especially if you live in a market where people are moving to from out of state. A lot of our new clients moved in from Ohio, New York, and New Jersey. And all those people are not accustomed to cheap prices. And now we've really started to see that swing of you can charge $100 a month for a lawn that takes you 15 minutes. Or in my neighborhood, you could never used to be able to charge more than $120 a month for a lawn. I mean, we've added 3 or 4 in the past 2 months for $160 a month. And we'll be getting rid of those eventually as we replace them with the higher profitable subdivision clients. But we're still in the process of doing all this ourselves and optimizing our current route. I'd say the next biggest pain point was marketing in that kind of 2020 time period. Google My Business hadn't really taken off, and I mean, I started to realize that one Google review was worth more than a couple months in revenue. And so do with that information what you will, but you need to get Google reviews quickly. You can have friends and family lead them. Do work for them for free and just be like, hey, I'll mow your yard while you're on vacation. Just leave me a Google review, something like that, right? And then you can take photos of it, and it all kind of builds on itself. And that's really how you can get the ball rolling. And then you start getting organic leads of people calling you. And as long as you keep striving for an optimized, profitable business, you will get there. The next pain point after that we sort of figured out the marketing piece was sort of that back office billing administrative side. And that's when I hired a bookkeeper. I hired Cycle CPA to take over that aspect, because even though I have taken accounting classes in college at the same time, it is very different doing it for your actual business and reconciling your own accounts and it all being accurate and being confident enough that when you're filing your tax return to go off of those numbers. Because in the event you were to get audited, you need books, you need records of all of that, and you need accurate tax returns. And that having all of that cohesive is going to save you not only in taxes, knowing what you can deduct and what you can't, but also in the event of an audit, in the worst case scenario, you have records of everything and you can say, this is how I came to these numbers, this is why I claim this. And more oftentimes than not, the IRS will say, you actually missed deductions, and they'll send you a check instead of, fining and penalizing you. So I'd say there's a lot of bad advice out there. I mean, don't get me started on the W-2 versus 1099 debate. It's not a debate. Your employees need to be W-2.
Right.
They're employees. So I've had that debate with people in quotation marks, but it's not a debate. They're operating as defined by the IRS as a W-2 employee. That's what you need to pay them. You have to pay a little bit in payroll tax, and you have to pay to have a payroll service. But that's the cost of doing business. Another reason why you need to be charging enough to facilitate that. Not to mention workers' comp policies, retirement benefits, health benefits, right? It can all add up, but that is a cost of doing business and something that you need to account for. If you're only profitable, if you 1099 your guys, you're not profitable. It's
Yeah.
as simple as that. If you're only making, 10, 15% margin and you're 1099 your guys, well, as soon as you put them on payroll, that's all gone. And you're not really a real business if that's kind of your comparative advantage is that you do something illegal, right? It's not. And guess what? You can charge enough. It takes more effort and you have to back that up with quality work so you can demand that price, but you can do that. And so hiring a CPA my first year, I think we had $28,000 of gross revenue. I hired a CPA because I was like, I don't want to mess around with this. It's not as expensive as you might think it is. It might cost you $1,000 to $2,000 a year, depending on
Yeah.
the severity of your business. It's worth it. I believe, Cycle started offering tax preparation as well. So if you use them for your bookkeeping or are thinking about it, do it. You needed to do it yesterday. Joe's not paying me anything to do that. Alex was my bookkeeper. I have zero incentive. I pay them actually. So, and I have for the past couple of years. I have no problem with that. It's 300, 400, $500 a month is worth it. You need to know your numbers. You need to know your books. And it's not really negotiable. And the odds of you being able to do that yourself and to learn that capacity yourself, is less than a 1% chance that you could do that. And B, not worth your time if you have any decent sized business because it's a lot easier to go and do $300 a month more of work to account for that cost than it is to try to spend a couple hundred hours doing that yourself and then doing the ongoing maintenance as well. And the odds of that being accurate, it's just not realistic for basically anyone. Unless your wife is a CPA, you need to hire somebody to do that.
Yeah. Absolutely, Lucas. And, definitely, a lot of challenges that any business owner faces. And now that you're past that point, right? You sold the company. Can you give us a little insight into what that phase looked like?
Right. So the past 2 years, I've been finishing my degree. I'm going to be working in wealth management. So that's kind of been the goal I've been working towards. Because even running a profitable business, it's been great, but it's not something I'm looking to do over the next decade or 2 decades. So that's what I've been working towards. Now with that, Ethan has had to take over a foreman capacity, so to speak, and really do most of the operational work himself on a day-to-day basis. Now I have to pay him more for that. We implemented profit sharing where he gets 10% of the profit at the end of each month added on to his additional pay, as well as a minimum of $500. So if the business doesn't net $5,000 profit because his salary lowers that amount, he gets a base $500.
Sure.
Um, if you look at our profit and you add back in his salary and my salary from last year, rough numbers, it came out to about $90,000. Again, we are not optimized to where I want to be. And so let's say it was about $90,000. Now, when it came to selling, a lot of people you can sell for about 1 year's profit. Now, depending on how many systems you have in your business, you might be able to get more than that. Demanding that in the green industry is difficult, and that process is difficult, and your customers and your employees often suffer because of it. So doing it right is difficult, and having a good succession plan is a difficult aspect of this business. So even if your business is worth, if you do 100 grand a year in profit, so you think, oh, it's worth 100 to 200,000 bucks, like good luck collecting that check in the next 6 months. from somebody, right? It's just not easy.
Yeah.
So I looked at what we had done the past, 5 years and Ethan's contributions early on. And I was like, all right, so if we made $90,000 profit, that's what you can take in your pocket your first year. And with our growth recently, it'll be more than that, but I'm not going to charge him more. I looked at that and I cut that in half and I said, okay, so $45,000 purchase price. The additional $45,000 you're essentially getting in back pay or equity, right? So when a lot of people work at startups and then the startup goes public and they have a liquidation event, they get wealthy because they had shares from early on. So I effectively acted as if I'd given him 50% equity in the business early on, and he only has to pay me that $45,000 mark. I think that is more than fair, for the work and the loyalty that he showed me over the past 5 years. So when I have the position of strength to give that to him and it's my turn to take care of him, I'm going to do that.
Yeah.
So he'll be able to pay that back in his first 6, 7 months of operation, and it's his from there on out. And again, he'll make $90,000, $100,000 his first year.
Wow. Awesome stuff, Lucas. That's been quite the journey there. And as we wrap things up, anything else you'd like to leave the community with?
Yeah, I would say as a whole, the only reason that I've been successful in this business, um, I would say is because whenever we had problems or issues, I pursued wise guidance and I pursued wise answers to those problems. And wisdom is hard to find. So I would say Jonathan from Florida Turf Pros is probably gives the best advice and shares the most wisdom for free for anyone to go watch. Go watch his content from the past 5 years, 6 years from his journey of starting a business, right? Might be someone good to have on as well. Brian's Lawn Maintenance shares a lot of wisdom. And those are kind of two guys that I've really learned a lot from. And don't be afraid to go and do that. I'd also say there's been a lot of people will be like, oh, you're starting a landscaping business or whatever service business you're trying to start, and you'll get these kind of derogatory remarks. I was graduating high school and I was the only kid in my class that wasn't going to college right out of school. I was also the only kid that didn't have a car. I would drive my mower down the street, right? I mean, if we want to go through the whole process, it's probably a 6-hour episode, right? Of everything I did and everything that you could do. We obviously don't have time for that. But being able to pursue excellence and drive towards what you know you want and what you're striving towards, regardless of what your environment tells you, is really important. And I'd just say is probably, a cornerstone of everyone's journey, who does make it in the industry. I would also say landscaping does not have to be the end all be all. Um, I invest 80% of the profits that we made from the business in the market. And obviously, I have a degree in finance now, and I'm going to be working in wealth management, so it's right up my alley. But whether that's rental property or diversifying into other small businesses, maybe you go the car wash route or something like that, that you understand that you can invest the money that you make from your business into so that everything is not riding on that business succeeding. Now you are de-risking, your position. And so not only did I have the profitable company bringing in cash flow every month, but I also had cash flow being spun off from the dividends of my investments and the investment value going up over time. So don't think that, oh, it's all in the business. This is all I can do. Landscaping can be a start, and it can give you that start. That's what it did for me. That's what I know a lot of guys have done. Look at Corey Ballard, right? They've taken that and they've grown that into something that can provide more opportunities beyond landscaping for them. But getting that initial, call it $100,000, $200,000 in the bank that you can then go use to do something else and keep your positive cash flow going, can really be a great starting point for what you want your life to look like. So do not get too narrow focused looking down at all my lawn clients, my machine, my truck, whatever. It's like think bigger picture. What do I want to grow long term? And because then you have something to strive for. And that's going to help you set your targets of all your goals that you're setting every year. And I would also say you can do it. If I, when I was 18, looked at where I am now, I would have been like, wow, like there's no way that I could get there, or that's not possible, or I was just thinking smaller. And then the abundance that our country and our economic system provides sort of showed itself to me over that time. And now I'm able to think a lot bigger and not limit myself as much. And so expanding your mindset, I would say for sure, is something that a lot of people won't give you sort of the positive message. All you hear on the news is doom and gloom and everything's worse, inflation's high, the market's down, houses are expensive, whatever. There's wars going on. All you're going to hear about is all this negative stuff, but the amount of abundance that is possible in our country is unbelievable. It's almost hard to wrap your mind around when you start to see it. And once you start seeing it and living in it and your life being a reflection of that, there's a lot more possible than you think. So you can do it. And do not let anyone tell you that something's not possible or that you can't. If you're willing to put in the work and solve the problems over time, you can do it.
That's great advice there, Lucas. And what's the best way people can reach out to you if they have questions?
Yeah, I mean, find me on LinkedIn if you have one. If not, we have a Durham Landscaping Instagram. People can reach out to me. As I have time, obviously I'm busy in my new career, but as I have time, I can go, check my DMs or whatever. I'm happy to help anyone who's willing to listen. I don't. Some people they're like, I don't want to give things away for free. People are going to steal my ideas. There's infinite demand for anything you want to do. So follow us on Instagram. You can find me there. It's probably the best way to reach me. Yeah, and hit me up with whatever questions you got.
Awesome. Well, thanks again, Lucas, for coming on here, sharing your story, and sharing advice and guidance for those as well. And wish you the best in your new career there.
Absolutely, Joe. Appreciate it.
All right.